Okay, just someone say yes if you can see the screen. And then I'll begin. Yep. All right, brilliant. Cool. So, firstly, everybody watching the recording and stuff, Happy New Year. Hope everybody's had a great start to 2024. I know I have. And yeah, so I feel like this year is going to be very prosperous for many of you guys in this. Well, hopefully all of you, but many of you guys that are actually putting in the work and stuff this year. I'm very excited to see what new results come out of everybody this year. So let's get straight into the first week that I was trading. So I'll start with GU, right? So I'm just going to mark this just so I don't forget where it is. So starting higher time frame, right? I mean, externally, GU has been bullish on the higher time frames and on the lowers. I think in general, like longs were just for like a continuation was definitely the right approach. There was a very nice long here, which I'll speak to you about in a minute. There was a short down into a point of interest earlier today, but like I said, it was into a POI to go higher, which has obviously now happened. And there was the long today for what was it? The news release that was about 40 minutes ago, right? So this was pretty sure this was the one, right? So this is obviously just oh no, actually I'll do this one after. All right, let's go to the trade here. Okay, so outside of like New York on Wednesday, G was obviously trading down. It made a high here, and then let me mark it out. Just go there and there, and then price had reached this high, right? Why this high? This high created its low over here. See, this one wasn't formed after a new low was formed, so that's why I would have just picked this high. Either way, they're very close to each other, so these two broke, coming up, created a new high. Okay, and kind of coming into session, we had price take this high, and then price had then breached these lows, so it was potentially bearish, you could say, potentially, quote unquote. But you need to think of obviously the more overall picture here, right? And that, I wasn't inclined on taking a sell. There was just no kind of reason to. I'm not going to let a small kind of 5-minute depiction over here kind of take it away from everything externally on the high time frames and obviously this kind of bigger picture here. So sells for me are not in the cards. I'm not sure if. Hold on, let me go lower. Let me just see where it is. Right, here we go. So we had this grab. Price then obviously broke this low, and then we had it moved down into a point of interest. Sorry, I'm just getting back in the Zoom habit. Reacted off this POI, and we had quite good rejection here. To me, I see that. I mean, I don't know if that's in any of your plans. I just see that as relatively good for forecasting a potential direction. It's not like something I look at and think, oh yeah, it's definitely going to go higher now. It's just an added confluence. Coming lower to the M1, I was focusing on this PA over here, right? As you see, price is moving down, right? And then we had a push down into that NF here, which is marked by this line, right? And then price pushed higher, pushed lower, took this low. And you could say, okay, right, in this instance, yeah, we're going to continue going lower and potentially trade higher here and then go to a lower POI, or obviously we're going to see something else, right? So what we saw was price push up, breaking this high and this one. And I like the fact this was broken as well because it shows bullish tendency after taking this. I mean, this is all very micro, but it's still of importance. And obviously I'm following the overall picture here of trend. And then the buy, as you probably guessed, was at this SC here. Entry on the open, stops at the low. And I mean, I feel like some of you would probably have taken this. Personally, for me, that is way too aggressive. There's no confirmation at all whatsoever. So I wouldn't have taken that in any realm. Obviously, we do have like the bigger picture bullish structure. But I think to me, that's just not that's not enough confirmation to just buy directly off. That to me is guessing a low. And I'm sure you guys would probably agree with that. So anyway, the target was at this high over here, right? 5.7. So price had obviously pushed higher. We failed to breach that low. We did breach this one, but there was no reason to go to break even here or even to move stops to the drawdown low. There was no reason to, because we hadn't created a new range. So, you know, you'd still be in the trade. And we came obviously to the lower part of the SC over here and then reacted, right? I think this was relatively textbook in terms of just miniature structure, obviously concept wise, it was very textbook as well. Full body, mitigated a previous SC, which took liquidity, very strong reaction. Order flow is obviously in check. You know, there was kind of, this was like a very easy trade in my opinion. And yeah, it ran to TP in 40 minutes. So cannot complain there at all whatsoever. I didn't target this high here. I targeted this one because there have been many instances when say if you've got equal highs, I'm sure some of you would have experienced this before, when you've got equal highs here, like this, for example, this one gets taken. There's a mitigation of a point of interest within here, and then price reverses, and then you're just left with 2 pips left of TP, 2 pips left until TP, and then price reverses and hits BE, right? Very annoying, but you know, it's best for me to be calculated. I'd rather capitalize on 5.33% in this instance rather than 5.7. It's not that big of a deal. I'd rather be safe than sorry. And yeah, this ran up for a bit and then it came a bit lower, which I'll show you in a sec. So this did actually run, assuming no partials were taken, 17%, which is brilliant. I mean, the realistic target would have been, again, the equal highs. For me personally, would have been this high here. But I didn't hold it until here because I'm not aiming for these ultra high risk rewards. It's not in my model anymore. It's not my way of trading. So, but if you were, then this high would have been good, 14.5%. Or if you're going for the extra high, 15%. Brilliant, beautiful trade. I mean, I don't really see anything wrong with that personally. I can't fault that, and I'm glad that one of those opportunities presented on Wednesday, so early into the year and into the month as well, and we managed to get that. So that was the first one. Has anyone got any questions regarding that? No. All right, cool. Moving on. Okay, so GU again. Where is it? Right, here it was. Okay, cool. So I'm going to go back to the hires and get rid of all the drawings. Back to the hires. Okay. So originally this morning I was looking to sell, and there was a very nice sell position, which I think, you know, I don't always preach selling into a point of interest in the opposite direction. I think that leaves a lot of room for errors and just unnecessary losses. I'm just going to mute everyone, just background noise. yeah, sorry, as I was saying, that leaves a lot of room for just silly errors, unnecessary losses, and it just jeopardizes your monthly target, right? So if you've made profit and you're looking to just take every trade here and there, I don't think it's a good strategy at all. However, this was a relatively, again, textbook entry down, and it's one of those very short-term plays, which I think you could consider one that is worth taking. You know, if you're in profit as well, I guess, I mean, I'm really trying to emphasize here and stress this: do not take the opposite direction of where price is going, because again, like I said, it's just unnecessary losses. But anyway, I'll take you through this. So this morning we had a break of all of these highs and a fill of the inefficiency that was left unfilled over here. There. And then on the smaller time frames here, we had quite a nice shift, if you like. So I'll go down into it. Let's go to the 5-minute. Price is climbing higher, higher, higher. Topped out over here. Push down. Broke the low here. Created a new high. Liquidity grab. Why is this a confirmed? When is this a confirmed liquidity grab? When this is broke. Oh, apologies. When that's broken. Where's the liquidity grab? It's here. If you can hear a dog in the background, I apologize for that. Price pushes up. This arguably is a nice entry. I just wasn't at the chart at the time of this. You could say there was scope for entry there. And then having your stop above the high that grabbed liquidity, which is always good. So there would have been a decent entry there. You could have run that for 5 pips to 20, so 1 to 4, which is okay, and potentially even lower. But I wasn't looking at that. I was more focused on this kind of leg here. Once this low was broken, it's a good indicator for me. There was, what was it? M3. Just give me a second, guys, because I need to remember which actual one it was. It wasn't that. It wasn't that. Here it is. M2. There it is. So the price had hit this inefficiency here, right? Now, in this instance, right, I wouldn't have taken this off of this inefficiency or any of these POIs, like directly hit sell on that, more for the fact that there is quite a lot of room for price to come back into in terms of your premium and discount over here. So to me personally, it's a bit risky, more for the fact you're not in the premium region of price between this high and this low over here, right? So that's just the one thing I was kind of being wary of. So I wanted to see some form of confirmation, which was present here. So we had that break. Price had broken this low, which isn't significant at all, but this one as well. And then pulled in for an entry, and there was a 2-minute inefficiency here. But my target was this region here for a sell. Again, I've hit my target, so it would have been demo, but still, that would have been my region here. Obviously, just taking that for journaling purposes. And then we missed it, unfortunately. But that is literally my error. I mean, even 50% of that would have been fine. That is a half a pip. So, you know, take that on the chin. You know, it's not that deep. Entry here. Inefficiency. LG. This high. BOS. Sloppy reaction up. Fast reaction down. And the TP was the 30-minute inefficiency over here. All right, so over at 50%, you could do the close. I mean, that's a bit more bit more, what's the word? Ambitious, I guess. Or you could do the open of the inefficiency here, right? 4.6, 5.3, 6, right? So that was the second entry. And again, the target was purely here because, or a bit above in this case, but the target was purely there because externally I am bullish. And that overall bias of the bullishness, this structure here, consistent higher lows, led the bias to the third trade, which was literally about an hour ago, for price to go higher upon the news release. I'm not actually sure. I can't actually remember what news release it was. So if anybody knows off the top of their head, please let me know in the chat. BPI, right? Okay, thank you. Okay, so the premise of this trade was obviously the inefficiency here. Again, price, when it comes to inefficiencies, right? I'm not sure if the RCV guys are aware. This is how I see it, is that when you get a inefficiency, for example, let's just say these lines here are your inefficiency. You've got your wick here and you've got your wick here. Price doesn't need to, when price is obviously trading up and then it's coming back down, it doesn't need to always respect and then react. It can come down, feel the inefficiency, go a bit lower. As long as price is balanced, you know, I still class that as valid. I think if there was a mitigation and then there was a break, then I think, isn't that what you call a disruption, Fredo, if I'm not wrong? Something along those lines. But obviously, because we didn't have a break on the example I'm about to show you, that to me is still a valid mitigation when it doesn't break. If I get rid of that, even if it goes a bit below, still a valid mitigation for me. Depends on, okay, understand, yeah. So going back to it, I can zoom things in the way, hold on. See, prices came in and traded up straight after. Pretty good order flow. Order flow is a bit weak here, but we had a kind of decent move here and then a push down, decent move up here. So to me, that is valid, and it's lows a few minutes before the actual news release. Price tapped in. It was this inefficiency here. I mean, you could say just this box in general. Stops below this low. Why? If we're looking really deeply, because this low was taken. Last point of mitigation for me personally. And price reacted, and that's another trade. Apologies. Actually, let me just go onto Discord. This was the result here. Right. Consistent higher lows, no breaks, no nothing. And the TP where I'm not going to, this wasn't my TP, but this is where I took majority of partials when I took the trade. Again, like I said, it was a demo because I've reached my targets, but that was the point of where I was taking this box here. So I was taking the partials. So now, if I just draw that back on, partials was there, 7.5. And then the extended target is, of course, this high over here. We could say this one, but I'd rather play it safe and just do it here. 12.7, still brilliant. I reckon this is going to hit, and I reckon we are going to create a new high. Actually, you know what? What's the time? 2:20. I mean, there's still I mean, it's Friday, so it could be a bit iffy here, but usually by 4 p.m. GMT, which is in New York time, 11 a.m. if I'm not wrong, and in Texas it's 10 a.m. I think. This should be hit in retrospect in any other day of the week, right? Your ultimate liquidity target, or the local liquidity will be hit by London close. Something I've just noticed consistently, right? And that's good because it allows me to be in and out of my trade within the day. I've reached minimum 5% most of the time, and it's a good target. And it just sets the premise for the week, right? But yeah, that's my GU trades. I did have an EU one. I think it was on Tuesday, but I'll just send in a markup because I can't remember how the trade was. So I would have to like spend time just reanalyzing and stuff. But I will send that in. I wanted to just quickly touch on crypto as well. It's a very interesting moment right now. Basically, one of the Bitcoin ETFs were approved by the SEC, and this just allows more and more investors to have access to investing in Bitcoin. But obviously, the Bitcoin ETF means they're not actually buying physical Bitcoin; they're just buying a contract that mirrors the price of Bitcoin. And I think as well, it just gives a lot of investors more confidence in cryptocurrencies and Bitcoin's future as well. So it's definitely bullish news for crypto as a whole. We did see the highest point since I think it was 2021 yesterday or the day before. So we reached 49,000, and the last time we were at 49,000 was, yeah, literally December 2021. So 3-year high, if I'm not wrong there, or 2-year high. Right. So yeah, overall stance, like, because I don't trade crypto on a short-term basis. I'm purely invested for long term. I don't actually hold any right now. I'm still waiting for drops, but the overall news there, I think, sets a premise for cryptocurrency's future in that they are going to be more widely accepted, more confidence, bigger amounts of money. And there's something coming in June 2024 called no, Isabel, no. I just said no, I don't hold any right now. All in the fund, literally all in the fund from 2020, late 2021. What was I saying? Sorry, yeah, there's something coming in June, which is a rule book essentially that's going to be set by European Central Bank or something like that, or the regulators in Europe on how institutions that are involved with crypto and individuals that are involved with crypto is going to be a pure set rule book on how and how not to operate. And that should also be quite good for crypto as well, because it gives it's literally a thing that says you can do this, you can't do this, right? And I feel like that's very in the air with crypto as a whole. And there's one thing that I actually saw, which was Coinbase. They reached out to the SEC saying, how do we operate in the right way, in the legal way? Give us some guidance. And they just completely rejected their offer, which is silly to me. It's almost like they're waiting for Coinbase to make a mistake, right? So I think if this thing comes in June, it's going to give clear set rules for every crypto company and every institution or individual that wants to buy them, gives room for innovation in the future, which is always great for crypto. And again, more and more confidence as more and more of these things come out. I think regulation is like one of those things where it's like you can see the bad side of it, but you can also see the good side of it and the bullish side of it as well. And I've been preaching this year that regulators are going to be one of, if not the main influencer on crypto prices this year, right? So always just keep an eye out for that. I mean, I'm more like the guys in my group, I'm always sending in, updates on the crypto stuff regarding regulators, because it is very important. Just keep aware of if you are invested. But yeah, that is that for crypto and FX. Has anyone got any questions or any pairs you want me to have a run through and give you a few minutes to think of anything? Good question, Eddie. I think the ETF, I mean, this is just my personal opinion. I don't think I wasn't expecting like a massive like, move into say all-time highs. I think there is definitely more room upwards, but we both know how this goes with crypto. It's, positive news isn't always a reflection of, or isn't always a forecast of instant positive price movement, right? We both know that, but I think yeah, it definitely sets forth a much higher price for crypto in the future. I don't know if it's just right now, you know what I mean? It's very hard to tell. I mean, very, very hard. I can't, I'd be just making I'll just be making complete predictions out the sky in this point at this point, Bits off topic, but as you are the owner of a fund, correct me if I'm wrong. Yes. Are you studying CISI or CFA? Yes, I'm doing CFA level 1. Again, I've restarted this year. Last year, it's obviously was my first year of the fund, so my whole focus is bringing in capital. That is my main thing. But yeah, I am studying CFA, and I'm planning to do what's the other one? CFP as well. I think that's what it's called. But CFA level 1 first. I want to get that knocked out of the park. But the test dates are fucking like so far in advance. But it gives me time to study as well. Obviously, bear in mind, I'm running this. I'm doing my own trading, running Corsica University. And I'm also studying for that as well. And a bunch of other shit. No, I don't. No. So the way the fund is set up is quite simple in regards to the setup itself. It's not like, a hedge fund where you got to go through all these different things. So it's operated under a MAM structure and a broker. And very simply, I'll just illustrate it. If you don't know what it is, there's your MAM here. And let's say there's 1,000 people, just do 1K, who have £1,000 in, right? They all have each of them have individual accounts. But when they make the account, when they sign up for the account through the broker, it's linked under the Corsica MAM, right? So this is the pool of, say, obviously 1,000 times 1,000's a million. So there'll be a million in here, okay? And then there's a separate account called the master, which do MAS. And the master is traded by an outsourced team currently because I'm focusing on growing the actual business. Is traded on here, and then the profits. So obviously we offer 3.5%. We offer 3.5% capped return. It's not promised, it's capped. So anything over that, we keep as a business. So say if we make 6% that month, the clients will get their 3.5%, and we keep the 2.5% on top, right? And then it's distributed back into the MAM, and then there's an automated calculator system which just pays each individual account accordingly to obviously their balance. Gotcha. It seems hard to study CFA about corporate. Yeah, I agree. There are a lot of bits in there where I've kind of had to do some external research on. I'm on the bit. I've got my notebook. Where is it? I'm on the, what's it called? I've done the whole morals and ethics stuff. I've done that. I'm on the next bit now, the more technical side of things. Are you mandatory to be regulated to run this fund? So yeah, the broker itself needs to be regulated in some form of jurisdiction. So the broker's regulated currently in St. Vincent and the Grenadines by the SVGFSA, which is the St. Vincent and Grenadines Financial Services Authority. And they're currently in the process of being regulated in 6 jurisdictions, one of them being the UK's, Mauritius, Australia, Cyprus, and 2 more that can't just think of off the top of my head right now. So must be Oliver. Yeah, I can't remember the exact thing, mate. But yeah, that's essentially how the structure works for those interested. Thank you for asking, by the way. Yeah. And it's very simple. There's lock-in for a year, 12 months, obviously to get the 3.5 capped. It's compounded, so it equates to 51% annually. And I think our kind of USP is more the fact that if you don't make money, obviously we don't make it as well. I only actually make money if we make something on top. I don't make rebates. I don't make CPA, whatever it's called. I don't do any of that. So it's very straightforward. But that's our USP. I think the thing is with this, where if you guys ever go into like thinking of running a fund, and trying to get your own clients and stuff, it's very hard to sell because it's so boring, right? It's very simply straight up, put your money here, it has the potential to grow and you get it back in 12 months. Or if you want to roll over, you can do it for another year, right? It's quite hard to sell. There's a lot of pros and cons to the business. Obviously, a pro being when you get a load of clients, you get a load of fucking money in there and you make good profits. But the cons are growing the business and everything else, But yeah, I actually asked the question in my group. If you guys are listening still, I asked the question in my group yesterday. Where is it? Where is it? What the fuck is it called? Yeah, here. I asked, what is everyone's like future plans in regards to trading? Like, do you guys want to do it like full time and do only this and just do it until you retire, or do you want to run a business alongside trading, or do you want to work a job alongside trading, or do you want to go like the corporate route? What's everyone's like goal? No, at the moment, Isabel, no, I can't. I literally have no ability to, because I'm trying to get clients. Remember, I started from square one again. But yeah, question, take your time writing it. Give me 2 seconds, guys. Just trying to find, just put your answers in if you can. Using that structure with MAM, does it remove the issue of liquidity shortage? I guess so. Yeah. I mean, it's pretty impossible to happen because unless like all your clients have invested, say January, right, and you've got no clients for the rest of like the year, then yeah, I mean, there's a fucking chance everyone could just withdraw straight away. But because obviously, let's say let's say I know you invested Eddie like today, and then Isabel invested next month, and then who else is in the chat? Oliver invested in March. It stops the. I mean, it's good in terms of like for many reasons. Obviously, it means there's like a monthly profit coming in because we don't see our company profit until the year's finished. So for the first year, we don't see any company profit because, for example, if you invested in January 2023, right, and we've done 60%, and then 1 month, this will never happen. 1 month we lose like 20%, which won't happen. Let me stress that. We've got to use our profit, our reserves to kind of top that up because we don't like our thing is like client comes first, always. We'll take money out of our profit to get the client's profit because the business doesn't run about the client. So that's one benefit of kind of like having clients come in like every month. But yeah, I think it's that would only happen if we had all our clients invested in 1 month. But even then, I doubt everyone would withdraw. I hope that answers what you're saying. Anyway, let's go down the fund route or the institution route. Still yet to decide, but definitely gonna get CFA sorted. Yeah, well, good to hear, man. There's a lot of plans in the works, by the way. That's all I'm gonna say. There's a lot of things coming, exciting things. So keep at it, keep active. There'll be opportunities arising. Anyone else going to answer this question that's external to my group? Work with a 0.8 workload corporate job for a few years. I work in a VC. What, in a, sorry, when you say VC, is that in a venture capital firm? What, do you work in one right now? Sorry, what do you mean by 0.8 workload? I didn't know you worked in a VC. That, I mean, 50 hours per week is the, oh, wow. Fucking hell, fair enough, bro. Yeah, that's cool. That's a very, very, very cool and interesting business for me. Uh, sorry, fucking hell, I was reading your message at the same time. All right, I see, I see. Okay, so that's what. Anyway, I'm not gonna fucking work. Anyway, what I was gonna say was that's a very cool business to be in, and I definitely think you should absolutely max. I mean, you probably are. You should absolutely maximize your time there and definitely speak to as many people as you can. But you know this already. I run a construction business, flip homes. Oh, nice. And I have a sneaker storefront. I plan to I plan on pizza investing nearly 50% to both businesses eventually, turn my construction supply company and have, oh, nice, man. Very good vision. Reason I ask this question is because I feel like a lot of people, if you're getting demotivated, they lose sight of their why. And I know, again, that's one of those cliche things like never forget your why, but it's good to just be reminded of it, and it gives you more that kind of, it reinstates that vision. That's sick, man. Well done. Congratulations. Really cool, man. Yeah, I actually agree with that, Oliver. It's really cool, guys. Really cool. This is what I love about having a community or being in communities as well. Like you just meet some of the, like I have no, like, Oliver, I had no idea you did that. Or Reggie, I had no idea you did that. You know what I mean? It's cool to just see. I think that's one of the main reasons I started, because you just get so many valuable connections as well. As just talking about trading and stuff. Keep it up, guys. Honestly, really good work. I'll probably leave it there then. If no one else has any contributions, yeah, if you got any questions or anything, please just shout me on Discord DM or email me. Um, oh yeah, okay. Fredo's going to go over some stuff as well, so I'll stop sharing. Thank you guys for your time, and I'll speak to you all very soon. On Fredo, whenever you're ready.
Hold on, give me 1 second. Can you need to disable the screen sharing option?
Yeah, hold on. You sure?
Okay, cool. Okay, two things that I want to go over. Let me pull it up really quick. Okay, so this is something we covered last week, I believe. With this is just the beginning, just introduction RCV Zoom I did last week for the members. Uh, Essentially, I went over my risk management strategy for tackling on prop firms, and there is pretty much two different approaches. And I explained why I went for a kind of like a what I call an adaptive risk management rather than a traditional risk management where people kind of just go 1% on every trade. Um, but to kind of make sense of this, or how what I kind of messed up on the last time or last week, was I kind of had increased my risk profile as I was increasing profit. And I kind of went up to, I believe it was 1.4, 1.3% per trade. And that can be a bit alerting just because you don't want to get close to that daily drawdown perimeter that they have in place, right? So in case you don't know how prop firms operate, they have so let's say, for example, FTMO, your profit target is 10%, then 5%, and then you get your funded account, but your daily drawdown is, I believe, 5%, and your overall drawdown is 10%. So what that means is that as a whole, right, you cannot get from $100,000 account, you cannot get to 90,000. That is consistent. You cannot get to 90K. But if you are to lose $5,000 within a span of 1 day, then you lose the account. That would be your daily drawdown breach. Um, so to avoid that completely, right? For the most part, most of you guys know how I trade. It's become more of an intraday slash scalp approach, and you guys know that I do that mainly because I want to trade a intraday bias and catch a scalp transition so that I'm in and out within 3 to 4 hours max, right? And if I if I get my positions to reach my target before that, then I consider that a highly efficient trade because I caught a transition and I caught a full move, right, within that 3 to 4 hour timeline. And I no longer have to worry about anything trading related for the rest of the day, which is where I think is the toughest part when you're attempting to swing trade. Is I always used to catch myself on my phone, right? Whenever the daily candles closed, right? Asia session before I would go to sleep, when I would wake up, and it's just like it's super stressful, and two, it's just like that's just not how I would see myself trading in the longer scheme. So either I take the approach of only swing trading from, let's say, from swing POIs and swing directional biases, or I can transition to a intraday slash scalp model so that I'm in and out, right, within the trading day. So for the most part, with that intraday trading approach, I only really take, right, 1 to 2 trades per day. I only trade AU and EU, as you all know, and I only trade Tuesday through Thursday. I kind of avoid Mondays and Fridays. Kind of been doing that for a while now, not necessarily because I cannot trade or I lose most of my trades on those days, but rather than, for me, I don't really have like a daily, weekly cap. So by that I mean if I reach a certain R, then I will stop trading for that day or week. I don't have that. So in order for me to not limit the upside, I'm gonna limit the input, right? Which is, rather than trading 5 days a week, it's only 3, right? And also, for the most part, usually one of those days I don't find any trades. So I'm now looking at potentially 3 to 4 trades a week. And as a scalper, I think that's perfect, because it shows, a bit of impulse control from my end, because that kind of relates to something a bit away from trading, but I'll cover it really quick, which is it's an Alex Hormozi quote. It's like the top, like, there's a study that said that the pretty much every hyper successful individual in the world has like three similar traits. That is that they're very competitive, that they have a crippling insecurity that they would never be enough. Or actually, it's not that they are very competitive, but they have a superiority complex. They think they're better than other people. Two, they have a crippling insecurity that they would never be good enough. And three, they're very disciplined when it comes to impulse control. And I think that third trait is probably the difference maker between profitability and non-profitability. You can know all the technicals, you can have the psychology, but if you can't control yourself when you're inputting a trade or inputting multiple trades, then kind of all goes to shit, in my opinion. So that brings us here, right, where I want to limit my input, and I limit my input by only trading Tuesday through Thursday, right? And my parameters for my trades are very, very low in terms of percent per trade. So with the 100K, right, my risk perimeter starts at a 5%, I mean at 0.5%, right? And if I'm going really, really conservative, which is probably what I'm going to do once I'm funded on my FTMO account, is the 0.25%, just because, all right, the only reason why I did not like prop firms at first was because you had those 30, 60-day limits. And I thought that was just total BS. I think trying to force 10% in 30 to 60 days, trying to force that is unideal. So now that those periods are removed, you can now take a trade take a trading account for as long as you want. So now the goal is to not reach that profit target as soon as possible, but to not lose the account. That's the entire goal. If I don't lose the account and I have a decent win rate, right, with proper risk management, then over time I will reach those profit targets no matter what, in my opinion, right? Especially if we're looking at 1 to 3, 1 to 4, 1 to 5s on a regular basis. So yeah, and with the adaptive risk management, right, if I'm going on a losing streak, right? So let's say I'm starting off at $100,000. Shit. All right, that means that my 1%, right, or my 0.5% would be $500, correct? Right. So if I was to lose that trade, then now I have $99,500, right? And if I'm to now do once again, actually, I'll just do this. All right, then that means that my 1% is now less than it was before, right? So the difference is not much, right? So realistically, this wouldn't change the amount of trades that it would take for me to lose the account if I was to lose the account, or if I was to take only losses in a row, right? So I fixed that by once I breach 99,000, and by 99,000 I mean that this is 99,000 through 99,999, right? And here the same, if my account balance is to reach 98,000 through 98,999, then I'm using a 0.4%, meaning, right, that now let me show you guys that the difference in risk, right, is now much less. So if I'm on a losing streak, then I'm losing less amounts per trade, but I'm also, right, if I'm going on a very bad losing streak, then, right, my risk per trade also diminishes, right? So the quantity or the percent base, right, lowers simultaneously as, right, the percent of, or the amount of money for that percent does as well, if that makes sense. I hope that's not too confusing. But the reason why I do this is, right, if we maintain the static 1%, then it would take 8 to 9 trades on average, probably like 7 to 9. All right, it really just depends also on commissions and swaps, etc. Right. However, if I change that to a 0.5% risk, now rather than it taking about a little bit less than 10 trades for me to lose the account, it's now 25 to 30 trades in a row. Right. And it's like 29, but like I wasn't accounting for swaps and commissions. So I put 25 to 29. All right. And if I'm to even lower that risk even more, right, then it's now becomes 50 to 60 trades. And if I'm losing 50 to 60 trades in a row, holy shit, man, like there's something wrong, you know? So I'm more so focused on this, not this, right? The upside will come, right? Because if I'm focusing on the downside and make sure I don't lose the account, then over time, right, the accounts will grow. Right, as long as my technicals are good, and as long as my psychology is good. And if your technicals are good, that's proven via journaling, that's proven via the quarterly report template that I made, etc., etc. right? So this is kind of the updated version for my RCV members. All right, so that concludes that. Any questions with this? Let's see. I'll send yeah, I'll send it for you guys. It's cool. But any questions on here? Cool, but does this make sense? We're not focusing on the upside, we're just focusing on minimizing the downside. If we can minimize the downside and be consistent over time, then, all right, in theory, we should be passing these accounts. Okay, cool. Next, I'm going to go over, right, so I'm back, I started to get back on charts this week, but I didn't take any executions. We'll probably start taking executions this next week. Oh, and also the last thing I didn't cover here, all right, is the checklist, right? And it's kind of in order of importance, but whenever you're choosing a firm, right, the number one thing is not the profit target, and it's not the how much you have to lose in order for you to lose the account. That's not the most important thing. The most important thing is when it comes to picking a firm, right, is payout reliability. We know this by how long has the prop firm been around? Do you know anybody who's had a payout, right, et cetera, et cetera? Is this company reliable to an extent? Because if this company is not reliable to pay out, then you're wasting your time to begin with. Nothing else will matter after that, right? If they won't pay you out, nothing else matters, right? So if they pay you out, cool. What's next? Spread and execution, right? How bad is the slippage on average with this quote unquote prop firm? Because if you guys don't know why there's slippage in prop firms, even though they're all demo accounts, it's because these prop firms are built for you to lose. That's the only way the business model works, right? And that's not anything that's new, right? We've known that since the beginning. All right. So what a couple of these firms do is that they code in, right, certain things or certain parameters, right, that pretty much creates a quote unquote simulated live environment, meaning that if you put in a bunch of or a very, very high lot size, then there will be some type of slippage, right? So how bad is that slippage? Is it bearable? Is it manageable? Right. And that's when entering the trade. Let's say my trade hits SL. Does my SL skip? Right. If I'm going to my TP and it hits my TP, but it doesn't trigger the TP, right, et cetera, et cetera. Like how is the slippage bearable enough for you to be able to trade the account? Yes or no? Right. And then next is the news rules. A lot of prop firms, they kind of don't they like I know a couple like FTMO has the rule where you can't take a trade, I think 2 minutes before or 2 minutes after news events. Whereas like I believe Smart Prop doesn't have any rules for news. You can trade news as you want, right? But I kind of want to avoid news at all costs with a prop firm account because that is how slippage occurs, right? And I don't want something to slip me where I have like a 7 pip SL and that pushes out to 15, 16 or 15, 16 pips, and I now lose rather than 0.5%, I lose 1%, right? And that's also why I'm trying to minimize, right, the amount of risk per trade, just because I don't want to breach that daily or that daily drawdown rule. Next is the drawdown rules. Right, I think these are self-explanatory, right? Is the overall loss a trailing drawdown, or is it static, right? For the most part, most of them are static with two-step challenges, right? So for example, with the 100K, right, as long as you don't lose 5K in one day, right, the only way you lose the account, right, is if you breach a rule or if you hit 90K, right? So if you make 5%, you're at 105%, and then over the next month, you lose 10%, you lose 10K, then you're now at 95K, then you still have the account, okay? All right, inactivity rules. When you purchase the account, does it matter when you take your first trade, or do they force you to take your first trade in 30 days, which is now, in my opinion, that's bullshit as well. Right, that shouldn't matter to the prop firm. But some people do that so that they force you to trade so that, you lose the challenge quicker. And after you take that first trade, right, what is the inactivity period there? For the most part, I think for some props, it's like 30 days or something like that if you don't have an execution. It varies. I personally don't know how it is with everyone, right? And then finally, customer service. If you have an occurrence of slippage, or if you have a payout pending, right? How fast is customer service to get you whatever it is that you want? How fast are they to do that? Do they do that in general? Okay, so these are kind of like the main things. So does anybody have any questions with that? There are instances you can email the platform to give them notice. Yeah. Yeah. Okay, so does anybody have any questions with this? All right, and then lot sizing, you could figure out your lot sizes here. And then this is kind of just like I want to say like an example per se. So no matter what, before I take my trades, I know exactly what my lot sizes would be depending on the amount of pips that I have, right? So with the whole risk management thing, right, the balance, right, resets for me after every trading day, right? So even if I lose a couple of trades, my risk perimeter is going to be the same for that trading day, and every night I will update it based on the account balance. That works with my scalping approach. All right, so that means that every day my lot sizes should be updated if I traded the day before. All right, and I have my lot sizes ready because for the most part, you guys know that these entries they probably have like a 1 to 5 minute time span in which you can get into the trade, right? So if we only have a very limited amount of time to take the trade, I'm not trying to waste minutes of my time figuring out what lot size to use. Just have that ready, right? Just have it ready. All right, so if I have a 10 pip stop, and I'll use a 6 slot based on these perimeters, okay? And this only works for XXX USD. If you have like, let's say USD CAD, then this would not work because you're trading USD to CAD, but then in order for it to get to your account, then you're also doing CAD back to USD. So this only works for EURUSD, but I mean, you're anything XXX USD, but there are lot sizing calculators here. So, right, and then when it comes to news, right, excuse me, FTMO tells you, right, which days you are restricted, right? That means that you cannot take trades during these periods, right, basically. So that concludes that. Does anybody have any questions when it comes to this? Any questions? Yeah, it's just look, what is in your control? Ask yourself, what is in control? How can I prepare? And how can it be ready? So now I just wake up, right? I check on my markups, see if there's a setup, and if there's a setup, okay, I'm good to go. Cool. So just make your life easier, guys. Just make it easier, right? Like this isn't some life-changing shit. I'm just being organized. That's it. Just being organized. Yep. And you guys know I only trade two pairs, AU, EU. I mean, on a very, very rare day, I'll look at gold, maybe I'll look at GU, but other than that, I don't really look at much. But yeah, I don't really look at much. Why are you risking different amounts for the funds? Yep, the point is to play the game as long as possible. So because you don't have a time limit, right, then you have unlimited time to reach the profit target. So why are you in a rush to get there, right? Because that's the main reason why people lose their accounts is because they're trying to rush to that profit target. I need a payout. No, that's not how it works, man. Right? And for the people in RCV, you guys know that in order to become a elite visionary, quote unquote, right, which the EV, why risk more then? What do you mean why risk more? What do you mean why risk more? Oh, bro, because I have two different accounts, right? I have it clear here. This is my aggressive account. This is a conservative account, right? And you can be very creative with this as well, right? You can be very creative where for the conservative account, I will only take X amount of trades, and then for the for the aggressive account, you will only take other types of trades, or you could trade them simultaneously, not as in terms of I take the same trades on both prop firms, but I will take my first 5 trades on this account, then I will take my next 5 trades on this account, and then alternate back and forth. Surely just a standard amount. Why would I do that? Give me the benefit, right, of the standard account, because all I need, excuse me, all I would really want you to follow is this. This, you could do whatever you want. Personally, don't care. But this is a non-negotiable for me, in my opinion. All right, so the point is you want to play the game for as long as possible. If you can play the game for as long as possible, all right, then you can survive. And if you survive, now you can progress.
Fredo, could I ask a question quickly?
Yeah, sure.
I'm not sure if you know or if anybody knows, but with prop firms, you know, for example, FTMO, if they have like a 5 minute before, 5 minute after you can't trade, is that, say if you're in a trade beforehand, and then so say you've taken one an hour before, does that mean you have to close 5 minutes before, or or can you hold? Are you
What do you
aware?
mean? For new, you're talking about for news?
Yeah, for news, because is it
Yeah,
you're
you
not allowed to
can't execute in that period,
not
but you can
execute,
hold the
right?
trade during the period. Yeah, yeah.
I get you. All right, cool. Good to know.
Yeah, I've been studying this stuff for days, just making sure I don't miss out on any rules because I don't want to lose the account over some BS.
Yeah, I can tell. It's good though. Good stuff.
But yeah, this is something that I personally slept on as well, which is the inactivity rules. Some props, all right, if you don't take a trade within 30 days of getting the account, they will put you as I guess a restricted account or something like that. And you have to email them for them to clear the account. But it's just that just goes to show the point of these props, as I'm telling you, like, right, the point of a prop firm is to give people capital so that you can then, or so that the prop firm makes money from the profit split, right? But that's not true with, anything CFD or FTMO, fibers, etc. Right? The only way they make money is if we lose the challenges, right? So they are motivated for us to lose the challenges, but to make it to where, right, a very, very small amount of people take payouts and they use those people as marketing, right? Because I believe it's I don't even know the number. I completely forgot the numbers, but I'll look into it and I'll show you guys some more of those numbers. But there's like a couple of CEOs for certain prop firms that are pretty open about, the percentage of traders that actually make money. And the thing is it's not necessarily 100% the prop firm's fault. It's also the individual's fault, right? We all know the issues with trading, from psychology to rules to not having an edge to, right, over trading, impulse control. You know how it goes. But yeah, any questions with this? If not, I have one last thing I'm going to cover. And
I was speaking to someone actually the other day who does these like algo things for prop firms, and I think it was less than a percentage, like less than 1% of people receive their first payout,
Mhm.
which is just absolutely crazy. And then as well, it's there's something to do with they have like apparently have like an external fund where the really profitable traders, their trades are copied on. Am I right in saying that? Have you heard that?
Some do, yeah. I think Fiverr does that, maybe FTMO.
Yeah.
Which, in my opinion, that's where the longevity lies with the project, in my opinion.
Yeah, exactly.
One second, guys. Why is this? All right, so this is the only thing I saw this week. This is all I saw this week. I believe it was 2 days ago. Yesterday was very, very choppy. And for the most part, I don't trade in environments like this. Like if you actually look at the chart, all right. For the most part, we have been stuck in a range. Or sorry, not in a certain point, sorry. We have been kind of stuck in a range for the whole week. All right, we haven't taken out previous week high, previous week low, right? We didn't create a new high, we didn't create a new low, we created an internal new high, but not an overall new high. There's just a sweep. So kind of just no man's land. I'm kind of betting on this to either come up and come down, right? But right now, I don't see this coming down right now. I want to see this liquidity be cleared and see what happens from there. But for the most part, I don't like trading within these types of no man's lands, how I call it. And how I classify no man's land is, let's say we have a structural range. All right, and we now take out some type of structure that solidifies the low. That means that, solidifies the low. We now have a structural range because this was probably solidified back here. So if we now don't have, or we have CBOS, right, and we don't create a new high, this solidifies here, then we come into the low, we don't break the low, we challenge some POI, and then now we have some more reactions, right? Then we don't break the low, I'm sorry, so we now have not broken a low or a high, so that I consider this no man's land. Just not somewhere where I would want to trade. I want to trade where the intent is shown, where a clear direction is there. Right. But this was kind of the bias that I was looking at this week, or 2 days ago. Yeah, 2 days ago. So what I had seen here, give me 1 second. What I had seen here, right, was there's clearly, right, a bullish structural range here. Right, obviously I know that internally there is a bearish POI, meaning that this direction is bearish, right? So the only way for me to be bullish is I would need a transition. That transition occurs once I hit an M15 wick POI, right? And then we now have a confirmed reaction internally, right? Because we could have a bullish reaction, but we're still bearish in terms of the minor intraday, and then the scalp here, right, is still bearish as well. So I would need a full transition in order to justify a bullish scenario. So we have a bearish POI inside a bearish internal scalp structural range that has a reaction, because if you zoom in here, I think on M1 and M2, then you clearly see that there is a low here that is taken that confirms the POI. And then once the POI is then taken, right, then that is order flow disruption, right? Order flow disruption. And I clearly see that there is a solidified point here. Let me actually make that line better. Clearly a solidified point here. So that's why at the time I saw that this POI made sense to go higher. But there's a reason why I was aiming for the POI and not for the high. Because, let me clear these drawings out. Because we have a bearish reaction here and we have a bullish reaction here. So that's the issue with no man's land, like I told you guys. If we have a structural range, right, and we then have a pullback, right, and then we solidify the high, and then we solidify the low, then we don't know realistically what direction we're going to go. So because this is a minor intraday and it's possible for me to catch a scalp transition internally, then I can pretty much ping pong in between POIs, right? Because even though we're bullish externally, internally, we are unclear. So I was aiming for the POI. Okay. Right. And obviously the outcome was there, and there was a very nice internal trade here. And if we were to zoom in there, there was actually a decent transition. Right, decent transition here. This is right where okay. So we know that we have a bullish POI, but we know that in order to get to that bullish POI, we need bearish movement internally. So I would need a justification to be bullish externally. Right. So obviously we have a solidified high here coming into the low, right? And we see order flow here, and based on this order flow here, right, we see a confirmed reaction. That reaction then breaks to the POI. That's once again order flow disruption. And the perimeter that I saw, and this is actually a trade a lot of you guys saw. This was very good to see. The perimeter was here into here. All right, we could have been very, very attentive and maybe waited for the overall POI. But right, this is a conversation I had with the group as well, is that quote unquote high risk to reward is now become more of an ego thing than anything, right? What we want to prioritize is making sure that we're in the trade and we have a proper invalidation point as our stop loss so that, right, we just win the trade, right? Because I know that if I'm couching a scalp transition on an intraday bias, right, and I'm taking a conservative entry, then at the bare minimum, I'll get a 1 to 3, 1 to 4, right? And based on that, right, I got a 1 to 4.8, right? And I didn't trade this, but I saw this live. Excuse me. And right from there was also a second scenario I saw, and this is also very efficient how I tell you guys, because if we catch a transition, right? Oh, shit, sorry. If we catch a transition, right, and the transition makes sense and the directional bias is correct, then usually we will see a high momentum outcome like this. And when we see a high momentum outcome like this, that means that my target was reached very fast. So if I have a justified scenario, right, a low time duration of the trade, then I have something called a highly efficient scenario. And then the last thing was AU. All right, one last thing here, right? We know internally we are bearish. All right, so if I want to catch a continuation, then I need a bullish to bearish transition. So I have a continuation BOS here that solidifies wherever you want to have your high. You could have here, or you can have it here. This would be more of a scalp, right? This would be more of a minor intraday. And so once the CBOS occurs, POI is tapped. I'm not selling here. This is a high risk scenario because I don't know if this bullish move is going to continue or not. So I have a POI, then I have my reaction, and I have my perimeter, right? And I can have an aggressive SL or I can have a conservative SL. And bingo, you reach your target. And that would be either 1 to 4 or 1 to 3, depending on, right, the type of approach that you're looking at. And this was, I believe it was a bit longer than this. It was like a 15-minute trade. So that I would also consider to be highly efficient. But that kind of concludes everything I have to cover for today. Do we have any questions or concerns? Cool, cool. Cool. All right, so if we have no more questions, that kind of is everything I wanted to go over today. I'll go ahead and give you guys this. Let's see. Cool. If we have no more questions, I think we can go ahead and wrap this up. Hard to understand it? Yeah. Yeah, but welcome to the game. Nobody said it would be easy. But yeah, if you want like I guess like a general view, right, of what the trading style is, right? Because I don't consider my trading style to be smart money concepts, right? Because I don't look for honestly, I couldn't even tell you what SMC people look for today. And then there's obviously this whole new wave of inducement, and then there's this whole new wave of change of characters or whatever. Doesn't make sense to me. So if you want like a generalized view of how we want to look for trades, right? My entire interpretation of perfect. My entire interpretation, sorry. Right, of the Wyckoff method is the study of transitions, right? The study, wait 1 second. The study of transitions, right? And there are different types of transitions. There's accumulation, reaccumulation, distribution, redistribution. There's only 4 things that can happen. But how do you differentiate these trading ranges, right? We do that via quote unquote SMC concepts, right? But we've obviously refined the rules to fit whatever it is, or to fit, right, whatever it is that we're looking for. So I understand, right, that by what I mean by the study of ranges is that I am looking for bearish to bullish transitions, right? Because I'm either catching a move when it starts or I'm catching a move as it continues, right? And if I can catch these transitions here with certain parameters, then I can achieve something called a decently high risk to reward, right? That's the entire trading style. I'm not trying to follow price, see what it does. I'm trying to study transitions, right? And that's why, right? If we go back to the examples that I showed you guys today, right? This is a continuation transition, right? Because we're bearish, but internally bullish. There's a bullish to bearish transition, and there is the outcome, right? Cause, effect, right? That's one of the main laws, right? Last one, right? This bearish to bullish transition to get the effect, right? That's kind of just the whole general view of what I look for, right? And we classify these transitions via continuation BOSs, disruptions, and liquidity grabs, right? That's what the models are based on. But that will be all for me, or all for me for today. If we have any questions, definitely let me know. If not, we can go ahead and wrap this up. Cool. Any questions, anybody? If not, we can just go ahead and wrap this up now. Had a couple of people on today. Very nice. Cool. Cool. Hope to hear from you guys soon. And yeah, time to put in the reps. Have a nice weekend, everybody.
Good shit, guys. Well done. See you guys soon. Just gonna end it now, Fredo, yeah?
Yeah.